September 18th, 2007 was a day that will live in infamy for the longest time. We saw the Federal Reserve cut rates by 50 basis points on that day. Subsequently, markets, as we all know, went to new all-time highs, right? We saw this back in 2007 when the narrative was of cutting rates to help the market as the situation was getting a bit heated. We also saw in August one of the bigger downturns that we saw during that period after an expansionary phase. Subsequently, in the following month, October, is when everything started to unwind, and it begs the question, are we going to have that now? Is there any evidence of that? And should we be concerned? That is the question we're going to be trying to answer today, ladies and gentlemen. We're going to be talking about Bitcoin, VIX, S&P, NASDAQ, IWM, or the Russell, better known as, and broader markets, the carry trade of yen versus the dollar, what's going on with the yield curve, and so much more. So buckle up. It's going to be a fun one. So first of all, we need to talk about what happened today on our markets, right? The S&P actually had something very bad happen to it. And bad simply being that the bulls were not able to advance further. They got into enemy territory, weekly higher high. All the levels that we're going to be discussing in today's video are linked in the description below to the weekend deep dive video, so you guys can check that one out down below. And while you're down there, if you guys wouldn't mind hitting the subscribe button and having bell notifications on, that way you can know when we go live, along with when these type of videos come out, to inform you of what levels and the strategies we have for the week. We give this to all you free. We also have a Discord down below that we're going to be starting a Sunday night get together with subscribers that you can join the Discord, be live on stream, chat with us there. We just pulled off the first one, so it was really fun, kind of bouncing different ideas off of there and what's going on. So yeah, just a fantastical time of Joe's just hanging out, chatting. Guys and gals, all welcome. So what happened today on the S&P? And the S&P wasn't necessarily the star of the show today. Well, first of all, we had a weekly higher high. Fantastic. But we did not hold it. We actually capitulated during the day as we were going into the close, right? We closed lower. S&P futures at the time of this recording, which is yesterday, when you guys are going to be seeing it, we're not too happy, right? We closed closer to the bottom boundary, slap right through it. We will see if we get some appreciation, but right now there is evidence that the selling will continue. Is that a bad thing? No, not necessarily, if certain things happen. Let's start off with talking about the S&P. Then we're going to jump to the NASDAQ, because the S&P narrative is what you guys need to pay attention to, but also the NASDAQ as a more crucial point as that pivot of bullish or bearish. So even though we had a weekly breakout that failed, we are still having a significant larger wick of the candle body to the upside. And that means that we necessarily went lower, bought the dip back up. I did say in the weekend deep dive that this was a dip buying opportunity, that anything above 557.29 is a dip buying opportunity. Even if we shed another, let's say 1% or 0.61%, that would be a bullish rally momentum possible play heading into NVIDIA's earnings. Now, some of the things that are concerning about NVIDIA earnings is that the revisions are split. Right now, we have a split between analysts of 19 to 12, expecting 19 bullish, 12 bearish. Well, you would look at that and say, why is that bearish? Well, simply put it, NVIDIA traditionally had a very skewed metric, 36 to 3 going into this earnings prior to this update. Previous earnings, 34 to 2. Notice the pattern here, 32, 30, basically all these numbers, high 30s, all skewed to one side, which was bullish. And we saw the subsequent earnings. They never disappointed. This is the first question mark, right, of is NVIDIA going to disappoint on earnings? And the natural question you have to ask yourself, do I want to be a part of that, right? Do I want to play NVIDIA earnings? And that's the natural question I'm wrestling with myself right now. And we're going to be talking about on the Wednesday stream, we're going to be obviously covering NVIDIA. But for the earnings play, I don't know if I'm actually going to play it, right? I've talked about on the channel a lot that I was willing to play NVIDIA earnings and probably do like a $300 play on it to make $800, but I'm not so confident in that. And also, my confidence, as Powell would say, wasn't increased by what we got today in the markets, and specifically the NASDAQ. This is where things get a little more interesting, because on the NASDAQ, we actually didn't have any green appreciation. We basically opened almost right at open was 0%. And then subsequently, we just slapped down to the 50-day moving average and our weekly low, and actually formed by a couple cents a new weekly low. This is good and bad at the same sense. If you're a bull, it's good because you defended the lows. However, the question is, how many times do you really want to keep talking about this topic of defending the lows? Subsequently, 3 days of defending the lows, I'm getting a little bit worried here that we're not necessarily gonna get a bullish rally. Now, for me, 476.27, the 9-day moving average, is the line in the sand on the NASDAQ. Anything above it, or price appreciation significantly above it, would signal to me that a bullish rally could continue. And we could get something similar to the 1995 rally, where we continued and continued and continued till eventually the dot-com. You all know, if you follow this channel for any period of time, my bearish thesis on the market, especially with the yield curve, that is slowly making its way down to an inversion. However, it has not inverted yet, so therefore we are not playing the bearish thesis out or trading the bearish thesis. I was very bullish on the weekend deep dive, where we said the NASDAQ and S&P were probably going to be our bullish plays. However, they're not turning out to be so hot right now. However, we have not violated the strategy yet, so therefore that strategy is still in play. One of the other concerning things was that Bitcoin actually closed higher, similarly to the S&P, but failed to hold that high. This is putting into question, is 62,000 going to be back into play? We're right now sitting, well, at the time of recording this video, at 63,000, and that begs the question, okay, how many times can we violate this level before we start seeing further depreciation in Bitcoin? The momentum is not continuing, as we've seen with various other stocks. The Russell as well, not having too hot of a day, got back up into this resistance zone up here, and we're just failing to hold it. And I'm just looking at this, I'm like, not bearish NASDAQ, but not really what I want to see from the NASDAQ. Not necessarily what I want to see from the S&P, but I'll take the dip buy opportunity. And then going into NVIDIA earnings, where the enthusiasm is going down. And also with the question of, is the Fed actually going to give you the rate cut? Which is very interesting, how the narrative is just wishy-washing around. And the question is, how can you actually secure your finances to benefit from it, right? We talked about looking at some of the bigger cap stocks. I talked about Amazon, along with similarly like Google, right? We talked about them, but they were just going sideways today. Not really huge price appreciation. NVIDIA just sideways chops, still maintaining the bull flag pattern. However, it's begging the question, are we going to actually get this rally? Are we going to ignite this rally? And what could ignite this rally? So let's just actually head over to the economic calendar so we can see what's going on in markets out there, right? And let's just clean this up real quick. So we can take a look at core good orders coming in below expectations, durable good orders coming in higher, right? So kind of a mixed data bag there. Atlanta Fed GDP now coming right in at 2% as expected. And Dallas Fed Manufacturing Business Index staying in contraction territory. So that's begging the question of the soft landing feasibility. We're going to get some more data today. We're going to get S&P composite along with housing data, consumer confidence to see how strong the consumer is, and the 2-year note auction. So all those data points will kind of give us a warm temperature feeling of what the economy is doing, what everything is expected. And then Wednesday, of course, we get the NVIDIA earnings. So that will be the main thing for Wednesday. Subsequently, we're going to get GDP on the Thursday, but that is just a preliminary print. They're expecting 2.8 right now, and then core prices to basically drop down. So that's expecting a better reading on the PCE. However, now we have PCE expectations. Now, note, guys, please record these numbers somewhere because they constantly change to set up a bullish or bearish approach. So if I take the numbers at face value right now, we can see core actually ticking up. This is not what the Fed wants to see. Sticky core. Remember, this thing was at 2.8 for the longest time. The Fed welcomed the 2.6 data, and then the question was, are you going to get continuation of this data? Right now, based on the expectations, nope, we're not expecting, and that puts it into a very interesting precarious situation. Does the Fed fight inflation, or does the Fed fight jobs? Right? The job market technically hasn't deteriorated to the point where the Fed would shift the mandate right away, but this would also cause Jerome Powell to eat his own words. I personally think the numbers are going to come in significantly better than these expectations. For one reason, we know the Fed gets the data early. Jerome Powell would not come out and look like a complete you-know-what on Jackson Hole, especially talking about his shipmates of transitory, right, after that blunder and shipwreck. And subsequently, I think this number is going to come in at 2.4 and 2.6 or 2.5. I think the core is going to be 2.5. I think this is going to be 2.4. I think it's going to show progress of inflation, and thus the Fed is going to be green light to cut, and then you get your 25 basis point cut in September. What happens after that, we have to see, right? But this is where things get very, very interesting. This is going to be the pivotal point, and we're most likely going to stream on Friday. Probably do a Wednesday, Friday type stream, because this is going to be very, very important to discuss, and we want to give you guys that time. Come and hang out with us on Friday. As always, it's going to be a fantastic time. We got the fear and greed also ticking a little bit right to the doorstep of greed. This is why I still have this thesis of a dip buying opportunity for the week. However, I will know exactly when I'm wrong when we violate the key levels that we went over in the weekend deep dive. Make sure you guys check that video out. It's going to be time carded right over here for you guys, and yeah, it's going to be a fun one. Again, thank you all so much for watching. I hope to see you in the next one. I hope to see you in the stream, and hit the like button on the way out. Greatly appreciate it, and have a wonderful day.